what do we know? We do know that this war effort, it's costing us at least $1 billion a day. So call it 365 annualized billion a year. That's about half of the existing defense budget, which is pretty startling. We can't afford this war. We can't even afford the interest on our existing debt. And to me, it really just does speak to the notion of a money that can't be printed out of thin air. And since this conflict started, call it February 28th, Bitcoin is actually up about 7%, whereas most other assets are flat or down. And so I think we might just start a grind up higher here as more technically where we are in terms of the price and sell pressure, but also broadening education in this super uncertain time. The value prop of Bitcoin becomes clearer and clearer.
What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism.
1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
We are back. It is the last trade. Brian and Michael. Gentlemen, what's going on? Just the three of us today. How are the two of you doing?
I'm doing good. Jackson, do you want to share our new format? Because I think we're going to have to prepare after this pod to let people know tomorrow morning they should be looking out.
Yeah,
Thursday morning.
That's a great point. So you're either going to be deeply offended or you're going to love it. But we are going to be releasing the last trade Thursday mornings, 9 a.m. Eastern. For the past 2 years, you've been looking forward to the last trade on Fridays. So we're going to actually want your feedback in the comment section. Let us know. Do you like the Thursday release? Do you prefer Friday? Want to hear from you. And then the other thing too is I really need you to like and subscribe to this podcast if you like it, because it really, my life depends on it. I say that jokingly, but it's also kind of serious. So if you're enjoying the content, nothing means more than your support. I love all the comments we get, even the ones that tell us that, we're not the brightest bulbs. I know that. I don't pretend to be. And so let's get on with the show. I think for today's show, what people can expect.
5 stars on Spotify too. 5 stars on your favorite podcast app.
So what people can expect today is the three of us, and we're going to be doing a lot more of this because apparently people like it. I truthfully don't know why, but we're going to give the people what they want. And so we're going to kick things off with maybe what is taking the most attention currently is the monitoring of the situation in the Middle East. So there's been a lot happening. Actually, Glenn Cameron, who leads the Onramp institutional team, put together a note. And by the way, if you want to be on that note, you'll be able to find it in the comments below. But every week we're going to be distilling the biggest macro events, market events happening, not only in Bitcoin, but just broader as well. Because I find this too, where a lot of the conversations in the space are very narrowly focused on Bitcoin. And what we want to do is deliver the best Bitcoin related content, AI, macro, etc. So what we want to start with is talking about what is happening in the Middle East. Michael, I know you have some thoughts there, so I'll hit it over to you. But really, for anyone who's not paying attention, there's obviously a conflict happening, a war, depending on what media outlets you listen to. And there's a lot constrained from an energy perspective. You may have seen on Monday that the price of crude went from like 80 or 90 a barrel on close Friday to almost 120, back down to 80 a round trip in one trading day. So there's a lot of volatility. There's a lot of uncertainty, not only in Bitcoin, which actually held up remarkably well in this context. We'll talk about that. But in commodities and equities, bonds, et cetera, there's just a lot of volatility and uncertainty in broader markets, and it seems to be more of a flight to safety, which with what we're seeing here in the precious metal space too. So Michael, what would you like to talk about in that context? I know you've been paying closer attention than I have.
Yeah, I mean, I did to have a take and also discussion point. I won't pretend, and I don't think anybody actually fully understands from a geopolitical perspective and incentive perspective what actually is going on, right? There's a lot of discussions around the petrodollar and China and Venezuela, or I'm sorry, Iran and Venezuela supporting a lot of the BRICS nations with oil and potentially cutting that off, along with obviously a lot of things going on in the Middle East. But I think the angle that I want to talk about, and that's important and ties into this, is the disruption and the asymmetry around intelligence and specifically warfare that's changing, and how that has changed the dynamic from a lot of like where the U.S. and other regimes have been able to politically posture or posture from a wartime perspective. So An example of this we saw when the Trump administration first came in with tariffs, and the example of that worked until it effectively broke the bond market and things started to get hairy and they had to basically pause that. And very similar here, I think that from everything I've heard, we over-indexed, and again, you can go back to treason or incompetence on the amount of power we had to be able to do what we needed to get Iran to do, what they needed to do. And we ultimately had to fold very quickly because of the Strait of Hormuz and the amount of oil that generally goes to there. I believe it's 20% of all the oil in the world had to effectively, it got shut down. And when you shut that down, you saw, I think you touched on it, oil went to about $118 a barrel, which effectively breaks everything. When you think about oil is the derivative of all byproducts that we actually naturally need in some form or fashion when you think about petroleum. And so by closing that down, they effectively changed the dynamic of, okay, well, what do we do? How do we do that? Just to being able to continue this if they're able to do that. But here's the crazy part. And this kind of ties into the Bitcoin asymmetry and money and AI asymmetry is around intelligence of warfare. This has been talked about a lot from asymmetry around drones and the amount of cost to produce traditional missiles and how drones can effectively counteract that. And so you have the U.S. Navy that's the largest, by 50 to 100 times in spend versus whatever Iran is able to do. And they're able to effectively shut down the Strait of Hormuz with either water drones or missiles on land. And I don't think that's fully appreciated or understood how that changes like geopolitics and where we have like power dynamics. The last thing to talk about or reference is you take all of that and there's that dynamic happening and that's just changing where everyone's thinking about their livelihoods, their jobs in AI. And then you have to look at now geopolitics and do we have the same posture? And then you go and look at money. And I know we want to talk about how Bitcoin's performed, but then also capital that's been stuck in that area of the world where historically you have this level of capital you're holding and you can move it, at a moment's notice. Counterparty risk isn't the biggest deal, where I think that's part of where we've seen Bitcoin look like a risk-off asset since the war started. It's actually increased in price. Is I think that there's a lot of components of real capital needing to get out of that area of the world, and that's really where Bitcoin shines, and that's something that most people don't appreciate.
Yeah, you pulled out a few things in there, which I think are super interesting. One is just like, you're right in that we really don't know what's going on. Also in the sense of everything that you see on social media, I would say 50 to 75% of it is like AI generated. So like a lot of the videos coming out of the war, it's very hard to actually discern what's going on. The other component is like the administration itself is sort of doing some amount of misdirection, right? Like when oil spiked earlier this week to 120, Trump literally came out in the beginning of the day and said like the war's over. We've accomplished what we needed to. Oil comes back down, markets close, and then he's like, actually, we're just getting started here. We have more to do. This is going to be a long, drawn out thing. It's like, so we're just going to like say what we need to say to get oil back down for 24 hours. So like, there's a lot of chaos. It's very hard to discern what's going on. I guess where I come from on it is like, well, what do we know? We do know that this war effort, I'm going to call it a war. They're going to call it an operation to accomplish. We're at war. It's costing us at least $1 billion a day. Roughly, those are estimates from the Pentagon. So call it 365 annualized billion a year. That's about half of the existing defense budget, which is pretty startling. And so it's, just comes back to like thinking through, we can't afford this war. We can't even afford the interest on our existing debt. And now we're spending $1 billion a day on this conflict or this war or whatever you want to call it. To me, it really just does speak to the notion of a money that can't be printed out of thin air. And I think, we talked, you alluded to a little bit, Michael, that, since this conflict started, call it February 28th, Bitcoin is actually up about 7%. Whereas I'll pull up the chart right now, but most other assets are flat or down. And I think this is actually means a few things to me. One is, I think there's appetite for a decentralized form of money, borderless, that can be moved. You mentioned, there's gold that's stuck in the region right now. It's very difficult to move it. It's costly to move. It's heavy, it's physical, et cetera. You can move Bitcoin much more easily. So I think one, there's a recognition there, but more importantly, I would say like this is kind of an indication that like sellers are exhausted and maybe we have sort of bottomed, and maybe that 60K, low 60K range was a bottom, because typically with this amount of like chaos and uncertainty, you would expect Bitcoin to plunge even further, sort of alongside some of these other assets. And it really hasn't. It's actually gone the other direction. So to me, it's more of an indication, less about like, oh, people now understand why Bitcoin's super necessary. I think it's more to me an indication that there's not a lot of sellers left to sell around these levels. And so I think we might just start a grind up higher here as both of those things converge. One, just sort of more technically where we are in terms of the price and sell pressure, but also broadening education in this super uncertain time. The value prop of Bitcoin becomes clearer and clearer.
Yeah, I mean, I like a lot of the things that both of you said, and I think it ties into something that Michael shared, I think earlier this week. But Brian, what you're describing is Bitcoin is superior in many ways to many other asset classes, but particularly in times of conflict, uncertainty, it is very easy to get capital into Bitcoin, and it's easy to get capital out of Bitcoin if you need to. And so, Michael, I think you had a point about gold specifically in Dubai. There's a lot of people who have held gold vaulted in all places in the world for a number of reasons, for risk off sentiment, for risk, uncertainty, geopolitics, whatever, war. But then when it actually comes to trying to get liquidity in times of uncertainty, it can be very challenging to do so. So Brian, I think that naturally ties into what you described, where maybe Bitcoin is benefiting from this market environment because naturally people are able to get capital in and out very easily. Whereas Michael, you have like those premiums, or rather discounts to spot gold happening in the Middle East because people can't actually get liquidity out of those positions.
Yeah, 100%. There's a couple key points to call out. One is, I heard Luke Groman say he would have expected the price of Bitcoin to be 55K right now, given what we know. And I think it ties into something that we've talked about, that part of this drawdown maybe was pricing this in already when you think about global conflict. I think the other thing that you referenced is the key point that like really underpins, because I know there's a lot of listeners that you're either maybe, nominally in 2 to 5, 10% in BTC, and they look at it as potentially risk on. But I think this example is spread throughout all society, all countries, that there is counterparty risk that exists, and you just don't feel it because for 40, 50 years, it hasn't been apparent. And it's in this world of volatility and disruption, and we see the layoffs and all these things happening, bond markets, specifically credit funds, effectively closing redemptions and having their issues and cracks showing, that this is only going to increase. And I think this particular incident is a great example because it was reported that gold via Bloomberg, that gold was trading at a discount. But more than that, that there was already reports that people were taking caravans through the desert to spend, I think it was like $250,000 plus to fly out of Riyadh. And so that area of the market has understood, we know firsthand that people hold material amounts of BTC, but they also hold other assets, that there probably was some pump, because how easy can you take real material assets if you're leaving that area of the world? And that's just like a tech forward kind of sector of people that have moved to Dubai. But the other side of it was this tweet that you're referencing. Peter Schiff commented and said tokenized gold was the solution. And I thought that was really interesting to call out because what does Peter Schiff say? I don't even know if it maybe got buried, but ultimately he was basically saying tokenized gold is the version. And this is, I think, really important to call out because I've been playing not devil's advocate, but calling out why gold is a form of money, why the liquidity profile and people do own it and should own it. But at the end of the day, this really shows the importance of custody and being able to move your assets instantly or with low friction. We had Matt Odell last week on the broadcast, and we came out and he was referencing self-custody as a gold standard. I knew it was going to, he's a good friend, so it was okay. But I called out like, hey, let's take a step back, because if you're self-custodying and you're in Dubai and shit hits the fan and somebody hits your condo or whatever, are you going back to your condo to get your hardware device? Like getting out of there, maybe it doesn't go, or whatever the case might be, you flow out, because why would you fly with all your money? And so there really is this world to rethink kind of the whole stack. And it's not saying anything's perfect, but it just really highlights counterparty risk. And you don't want to be caught off sides in how you think about managing your wealth long term.
Yeah, the other thing that just made me think of, and I believe you guys touched on this in the broadcast last week as well, but like the Chamath stuff around, saying Bitcoin isn't private enough, all these things. And I think Matt did a good job of explaining why, there are ways to use Bitcoin privately, whether it's Lightning Network or different techniques. Now, can that be done at scale? I think that's a different question. Like if we're talking about central banks using Bitcoin privately, I think that's a little bit of a different question. But where my mind was going was like, there's just trade-offs, right? Like, okay, so Bitcoin's more transparent. It's an open ledger, but you can move it without like having to move, billions, billions in gold to move is like, it's super apparent you're moving that gold, right? Like, so I guess it's more private, but like, it's actually more out in the open in that sense. So it becomes more difficult when you actually need to move it. So it's just like, there are different levels to this thing. And Bitcoin's transparency and its digital nature is actually a huge benefit in terms of one, the counterparty risk, being able to custody it yourself, but also being able to move it in a way that you don't need to rely on, massive ships or armed guards. And so in these times of like serious conflict, like it's such a massive advantage for it to be digital in nature. And I think some of Chamath's comments are just discounting like that element of it, where it's like, okay, yeah, it's an open ledger, but if you're comparing it specifically to gold in this context, like there's trade-offs, but there's also huge advantages here. Does that make sense what I'm trying to say?
It does. I mean, one thing I want to share and throw out is we will settle at Onramp like $1 billion oil tanker shipments, right? And what do I mean by that? Well, since like 21, I've had this notion and idea that in the same way, because if you go back and understand Bitcoin and mining, and it's probably still operates to this day like this, that you just ship, money, BTC wires into China, and then they ship the miners, and it's effectively you're just waiting on your hands for the miners to show up. And when you take geopolitical conflict, when you take coordinating or navigating the seas, when we have this level of asymmetry with drone warfare, you're going to naturally, it changes the dynamic on settlement of whatever goods, let's call it oil. And so the idea has always been that you would have multi-sovereign, multi-level custody arrangements where you effectively can have two of three of five, where you're net settling based on the delivery of whatever goods. And if they're not delivered, you're able to sign those transactions and move them back. And I was thinking about this the other day. I'm going to get forced to start writing. And like, this is a part of the stuff I was thinking about. Like, this is an example of, from a geopolitical perspective and money movement, there's no other asset that can do what you just described. Because if you're trying to send $1 billion of gold for the $1 billion in oil to make sure your sovereign is whole when it comes to creation and whatever you need to do, so they don't riot, well, how are you going to do it if you have to put on a plane or a helicopter, and where drone warfare exists and, there's intelligence agencies that know you're moving that amount of capital? The last thing I'll say, if anybody hasn't listened, I've called it out before, probably best podcast at 60 Minutes about like Bitcoin was Murad Mammadov. He's kind of gone down the crypto route, but it was 2018 with Pump. And he said something that nobody else has called: Bitcoin or geopolitical monetary nuclear weapons. Because at the end of the day, when you get to this asset being $1 million and $3 million and $5 million, and how you're going to net settle energy production, AI chips, whatever else you need, are you really going to just like have one entity? You're going to send all those like physical commodity goods and then trust them to do it. You're going to need people to make sure you navigate to get where it gets, and then the incentives to align to tranche out those payments.
All right, I got a quick question for you. So if your Bitcoin doubled tomorrow, how would you feel about how it's currently being secured? I feel like most people have not actually thought deeply about this question, and quite frankly, don't have the best answer. And that's okay. I mean, I was there before, and I talked to people who self-custody, and they've done it for decades. And I also talked to people who sit on centralized exchanges and could just never get comfortable with self-custody. And honestly, that's why we built Onramp. You have multi-institution custody, you have Lloyd's of London insurance, you have inheritance planning baked in, and you have a team that can walk you through all of it. So it only takes about 15 minutes or so, if you can believe that. And you can book a consultation directly on our website, onrampbitcoin.com. And I'd be happy to speak with you. It's a free consultation. Speak with either myself, Cam, Michael, Kellen, someone on the team will speak with you, and reach out to us anytime. Hope to see you soon. I mean, yeah, there's a lot there. And you know what? I'm going to be the first subscriber to Michael's new Substack when that releases. So I'll be there, Michael. Don't worry. I'll have your support. But I mean, a lot of what you said makes sense. And I'm also mindful of we're trying to keep the ship. We're trying to keep the cargo ship moving in the right direction with this podcast. So one thing I wanted to talk about in the context of all the uncertainty that's happening, like, I don't know what the hell is happening. Most people don't. I think Brian or Michael said that at the start of the show. But what I do know is things are moving exactly as designed with Bitcoin. And what I mean by that is this week, Bitcoin's mine supply hits 20 million. I mean, like, this is such a stark dichotomy between all the mess that happens in the traditional monetary system versus a system that's just like block, 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 going right as initially scheduled and released in the white paper 2008 and then 2009 going live. And this at least gives me a little bit more clarity because I don't know what's going to happen with the conflict in the Middle East or the war in the Middle East. And Brian, I didn't know that stat about the government spending $1 billion a day. Like, we already know the debt's unsustainable. We already know that this is a total mess. So it's like, what is the alternative? And it's nice to see that good old Bitcoin is just delivering TikTok next block. And I think there's a lot that we could talk about here, but maybe the most important aspect is that 95% or so of the total Bitcoin issuance has been mined already, and now we have 1 million more Bitcoin to be issued over the next 100 plus years. Like, that is, and then you tie into everything that Michael and Brian are talking about, where most people still don't understand that Bitcoin's a risk-off asset. Most people have 0% or 0.1% allocation to Bitcoin, and they probably have a bunch of other shitcoins, and they don't know the difference between the two. And now you only have 5% of the supply that's going to be dripped out over the next 100 years. I don't know what happens next, but it's at least nice to know that this system is working exactly as designed, and there's no one here that can tamper with it. I mean, come on, like, that's a pretty good value proposition. Put all the other narratives aside. Like, it's just nice that the system works and there's no altering that. And I think that's especially true in today's world, where you can open X every single day. You'll get a different feed, a different algorithm pushing a different narrative, and you can never know what the hell is actually going on. At least with Bitcoin, you know what's happening.
Yeah, I mean, when you put it that way, it really simplifies the whole notion of Bitcoin being a common sense test versus an IQ test, because whether it's the amount of dollars that have to be created or the denominator for all other assets deriving from that, in nominal terms, you're just getting crushed, and people don't necessarily know it yet. But the AIs and the 5-year-old will pick the common sense. I don't know if this was a topic, but this is kind of further underpins what you're describing, Jackson. Is smart money understands this. According to Glassnode, $42 billion in Bitcoin was accumulated between the 60K and 70K price. That's roughly 600,000 BTC, 8% of the circulating supply in 2 weeks switched hands, which is pretty crazy to think about in just 2 weeks with this drawdown. And so I think that's where, to start the year, we were still pretty bullish for where we end this year, because I think that the cat's out of the bag in understanding debasement and Bitcoin be a viable solution for everyone that lives on this planet, whether you're sovereign or individual. And it's just a function of time now before the price reflects that.
It's well said. The only other thing on the 20 million I would say is, like, it seems sort of maybe like mundane or obvious to people that are following Bitcoin closely. Like, okay, yeah, obviously as expected, we're now at 20 million. But I do think it's important to call out because it's a milestone that is like it's an opportunity for education, in the sense that, like, most people still don't know there's 21 million Bitcoin. They don't understand that there's a programmatic supply issuance schedule. So it's worth it for us to call these things out as milestones, because it's just a nice moment and opportunity to educate the masses on these things. Because again, most people aren't as tied into this stuff as we are, and they don't even understand these concepts. And so when you have these nice round numbers to point to, it's a great opportunity to explain what's actually going on here and why it's important.
It just made me think, I'm just going to say it out loud, so ideally it puts a fire on. We need like a campaign, like, did you know, like 21 million question mark, or did you know there's only 21 million? Because Brian's point sounds crazy, but when you talk to people in normal land, they genuinely have no idea that Bitcoin's supply is fixed. And then just that number, the contrast, 20 million is very small when you think about global demand. And then the next million, I think, takes like another 100 plus years to be issued, which is just crazy to think about.
Yeah,
And
we're all going to be like, you got it.
I was just going to say, like, so you said we're at 95% now. We get to 99% within the next, call it like 5 to 8 years, I think. So it's really like that last 1% that takes the 100 years. So like we're going to get most of it within the next few years here, which is crazy.
Do you think we'll be around for the last block, or the last Bitcoin mined? Would just
Well,
be like
if we
hooked
all-
up to
if
the
we get-
Neuralink,
yeah,
and like
if
we'll
we're
be hanging out
Neuralink,
with
if
James
we're-
Camp, and we'll be doing who
Right.
knows what, just vibe coding from our brains.
The way things are going, we might make it to the 99, just the 99, but we'll see.
Yeah. Well, look, for listeners of the show, we're going to try out a new segment here, signal or noise. So get a couple things I want to pull up. And we can just go around the horn. Let's riff on a couple of notable things happening, not only in Bitcoin, but also in broader markets economy. And so we'll start with Michael. This one is one that you had brought to the table here. NASDAQ partners with Kraken and plan for 24/7 tokenized trading. What's your just high-level take here? Is it signal? Is it noise? What should people be paying attention to?
I think this is extreme signal. I think at the end of the day, we've been talking about this, probably one of the only on the Bitcoin side, talking about stablecoin and then now tokenized assets will be bullish for BTC. At the end of it ultimately goes back to these tokenized stocks, and I didn't go deep, but they have a certain level of ownership that is reflective of what you would own in a traditional equity brokerage. It's not like when Robinhood was issuing like SPV that was like mirrored to the equity. Like this is actual equity that can
You're
be
just saying like fractional shares, right?
Well, not necessarily fractional shares. It was like the equity that Robinhood initially did like last year when he looked like the bad guy villain and whatever he was at in Italy was not even sanctioned by the company to be traded there versus like this is actual stock that like the NYSE would recognize because this was a partnership, I believe, between NYSE, Kraken, and then maybe one other broker. But the point being is that regardless if we like it or not, what as James alluded to, the machine or the subtle hand is going to tokenize everything. Larry Fink has been saying this for years. And so you're going to have the aperture and just inertia change in the traditional finance and tech world around stablecoins, tokenized equities, and then BTC. And those will all be interoperable. They'll all be able to be swapped. They'll all be able to be taken into your fintech neobank or traditional Morgan Stanley account. And then you'll be able to do things with them. An easy example of it is if you had $1 million of tokenized equity in SpaceX and you wanted to get some margin to go buy BTC, you will be able to lend against that. You will get stable coins and you will be able to go buy BTC. In the same way, in reverse, you'll be able to lend against your BTC. You'll be able to get your stable coins. You'll be able to transfer it into SpaceX. And that whole plumbing has never existed before. That's what they're going to do. They're going to do it because they naturally have to, again, obfuscate real versus nominal returns. So when everyone's pumping all this stuff, there's going to be a bunch of money loss, a bunch of crazy things. It's not right or wrong. It just is. And I think this is just an example of what was already coming. It's just kind of made headlines because it was one of the first.
Yeah, I mean, I agree with a lot of what you said. It makes sense. One thing that comes to mind as well, though, and it ties into maybe some of this private credit stuff we could talk about. We don't need to jump ahead to that just yet, but it comes to mind because essentially what you're describing and Larry Fink has been talking about for a long time, which, by the way, I'll go on record. I'm not a fan of Larry, but like we're just talking about what he said, right? So he's been talking about just democratization, like whatever that means to him. And my interpretation of that just means maybe particularly in the private market context is want to open up the aperture for retail investors who historically have not been able to access markets until companies are public, allow them to invest earlier on. But it begs the question where you see with all the dislocation happening in private credit, happening in private equity, where maybe they just want more investors to participate in these markets because they need bag holders. Like a lot of the money is made in private markets very early on, and then a lot of it's made in like growth equity now, and then it delays the IPO. Some IPOs go well, some IPOs don't. But point being is, I think ultimately we're just looking for, or not we, but they're looking for more people to participate in these markets that are already held and propped up, or the wealth's already owned by older demographics, and they want to kind of loosen the restrictions or rails or ease the point of access to let people who have not historically had those accounts start to tap into those markets. But I also think that it's just a matter, to your point, Michael, it's like it is more efficient. It does make sense to a degree of where things are headed. Like we're probably going to live in a world where we can tie into stable coins. There's just going to be a lot that happens there. And the system we already know is incredibly inefficient today will be a little bit less inefficient on stable coins, but it still has all that like nonsense and counterparty risk baked into it. So generally my thoughts there, Brian, I know you may have some things to share there as well.
Yeah, just on the Kraken stuff, I agree with everything Mike said. I would say the larger signal to me related to Kraken last week was them being granted the Federal Reserve account, the first digital asset firm ever to be granted that. It's something that's typically only given to like actual banks, and basically just allows them to reduce some cost and friction when dealing with the Fed and basically dealing with a lot of their institutional clients. So I think that's like pretty wild in the sense that like I think they were embroiled in like an SEC lawsuit not only like 2 or 3 years ago. So to go from that to being the first firm to be given a Fed account, now sort of these various partnerships that are going to enable the stuff on the tokenized equity side. It's interesting to see because it feels like Kraken's kind of out of nowhere been like anointed as like, okay, now we're ready to go here. And we've seen sort of other examples of this. But it is just wild to think like the full 180 from where we were with some of these firms, not even 2-3 years ago, to now being granted a lot of these types of access. And really what this is these firms looking more and more like actual banks, and whether it's BitGo and those other firms being granted OCC charters a few weeks ago, and now this with Kraken, like that's where we're headed, and so I think this is incredibly bullish. As you mentioned, Michael, like while it's easy to get distracted and be like, oh, this is about stable coins, this is about equities. It's like, no, this is all bullish for Bitcoin in the sense that it's normalizing these things. It's allowing digital assets to become normalized. And why are you guys laughing at me? Is it just really
because
loud?
it sounds like someone's pounding in the background and you didn't go on mute.
All right, well, that's all I had. Go.
So one thing I wanted to share, because I think Jackson picked up on it, but I meant its signal in the sense of like, this is where the market's going and to pay attention. I think like, I like Brian's take in that he started to put on the tinfoil hat of like, oh, that's interesting Kraken in the same way. Oh, it's interesting SBF when FTX went up and then down and then everything came in. I do think that there is an overarching meta of crypto and all the craziness from the past 10 to 15 years was effectively the testnet for what we're going to be breaking in here, meaning high velocity, high throughput, high leverage. To Jackson's point, dumping on retail, giving global markets exposure to U.S. equities, which increases the demand there. And then ultimately, you're going to see insane amounts of leverage and losses. I think the understanding is ultimately that it is really, really hard for individuals to change their whole mindset around a 60-40. Like that is so entrenched, like, gravity or oxygen, that's why people will adopt these things. It's less about even being more efficient, because maybe in the private markets, tokenized equities are more efficient, but we have the most efficient liquid markets already that exist. Maybe they don't trade 24/7, but you can make the case, should stocks trade 24/7? I think the real thing that is lacking is just natural first principles thinking about like, what is money and what's an investment? And so we're going to have a lot of pain through what we're talking about that is quote unquote signal, where people were going to lose their shirt and then they're going to have to realize, oh shit, Bitcoin was money, everything else was an investment. Now I should just hold this and then I only invest in things, and that'll just like change the whole dynamic. But we're going to maybe decades before that's realized.
Yeah, I think it will be decades, because at the end of the day, a lot of this is generational. So when you were describing that, Michael, I was thinking, well, yeah, who's actually going to have tokenized equities? It's not going to be my parents, like not going to be their demographic. Think about like baby boomers, Gen X. They already use what they know. It's going to be younger generations that are already more like akin to or keen on trying these different types of solutions. It actually ties into a conversation we had back in Miami a couple of weeks ago with our buddy Shalin, and we were just talking, or actually before you got there, we were just talking about all the generational differences. Like I always think about how my grandparents grew up during the Great Depression and never, like after living through 90% drawdown in the equity markets, would never touch equity markets. Like they just owned government bonds, they owned CDs, maybe they had some precious metals, but they didn't have a lot of money. So I don't even know. It's probably just like some bonds here and there and some cash. But they would never touch equity markets, even though my dad was like, oh, well, maybe like this and that, you should invest in equities. they're like, yeah, we're not going to do that because we saw everyone get wrecked 90% in the 1920s and 30s, or at least grew up during that time. And so I think for the tokenized stuff, it's going to take a very long time. I know the narratives are and the seeds are being planted, but I can't imagine where most of the wealth sits today is actually going to want to use those solutions. I think it'll be a barbell where you have probably traders who want access to 24/7 liquidity in markets will use those types of solutions over the traditional stuff. And then it'll be younger demographics that will be using these different types of like digital asset neobanks and all this nonsense, or not nonsense, but like all these different things that are perceived to be nonsense by, people who sit in like the 40 to 70 age range currently.
I will say there is incentives that are in the background that I think would subtly tip the scales to be against it. And simply because I didn't pay too close attention, but if you saw 2 or 3 weeks ago, there was some guidance by the Office of the Comptroller of the Currencies that manages the banks around the ratio on reserves on tokenized securities. And it's the same angle of like it's like a cousin of the version of Bitcoin furthering dollar dominance, by treasuries and stablecoin liquidity, but also that it's been expected that when banks get in, they're going to have a reserve ratio of somewhere. It used to be 1-to-1, meaning you have to have every dollar secured versus for every Bitcoin dollar held in custody. It might be 25 to 50% of that. Point being is I think they're going to do something similar around that. So you'll naturally have people go into there to create more of a financialized economy. So it's just something to keep on your radar. I think that there will be incentives at play to get people to participate there.
Player game. There's always incentives to play the game. All right, I got another quick one for you. If something happened to you tomorrow, could your family access your Bitcoin? I know it's a heavy topic, but it comes up every single day, and I think it's worth addressing. In fact, I know it's worth addressing because if you're like me, you think about Bitcoin as a multi-generational pursuit. And quite frankly, if you don't have an inheritance plan, then it may be all for nothing. I know it sounds like potentially an exaggeration, but it's honestly true. Bitcoin's a multi-generational pursuit. If you don't have an inheritance plan, your family cannot confidently, reliably secure the asset, then what's it all for? And so I've thought about this a lot. My situation has changed over the past several years, and I no longer just have to think about myself. And so even if you're someone who feels confident managing your own keys, you have to ask the question, are your loved ones, is your spouse, children, whoever it is in your life, can they recover your Bitcoin? And so with Onramp, inheritance planning is built in directly into your multi-institution vault. You also have Bitcoin that's segregated in your own wallet, and it is insured by Lloyd's of London. And the best part is it only takes 15 minutes to get this set up. So if this sounds intriguing at all to you, you can book a free consultation on our website, onrampbitcoin.com. Brian, let's talk about private credits. I'm going to pull this tweet up here real quick.
Big cooked.
It's so funny because I remember when I was at Stifel in whatever it was, like 2019 to 2021, I think. Everyone loved these types of interval funds. Everyone loved private credit. Like, oh yeah, you can get awesome yields. It's fairly liquid. You can redeem quarterly, this and that. And now just a couple years later, more than a couple, but handful of years later, you have all these fire sales happening of just illiquid assets. People are at the gates trying to redeem. And it ties into a different type of counterparty risk, like different than what we typically talk, similar and different than what we talk about in the Bitcoin space. But you essentially had investors that were allocated to these types of private credit funds, meaning it's, funds that allocate and do loans that are not traded publicly. And in this case, it's Cliffwater Corporate Lending Fund, which has $33 billion in assets under management. And it's an interval fund, meaning investors can only redeem at quarterly windows capped at 5%, but redemptions, meaning people who want to get their money out, just at 7%, way higher than the gate of 5% quarterly. And so now you have these funds. This is not just Cliffwater, is happening across the board. You have these funds that are now having to sell illiquid assets and are going to have to take a big haircut just to meet redemptions over time. And they're not even guaranteed. It's going to take a long, because it is pretty much a self-fulfilling prophecy. Because once you see other investors running for the door, then it kind of incentivizes more of that behavior. So it's a total mess. Brian, I'm curious what you thought of this.
Yeah, a few things. Very similar to you, back when I was at BBH in 2018, 2019, credit was super, super hot. It became sort of the new alts that everyone was interested in. And so I think naturally with asset classes, there tends to be a little bit of bloat when something gets that hot and there's basically too much capital chasing not that many opportunities. The other big factor with these funds, and it's not only isolated to private credit, but also private equity, it's like the success of those funds sort of like 5 to 10 years ago was very much a function of like the interest rate environment. So given that interest rates had risen so aggressively over the past few years and still remain elevated, relative to the previous decade, that was a huge part of the strategy of these funds, that it's finding these companies, whether on the equity side or on the credit side, and basically just doing financial engineering and taking out debt, cutting operations, cutting headcount, those kinds of sort of machinations to then sell them at a slightly higher valuation. So that's kind of out the window. And so I think that's part of the story here. And then to your point, like it's not isolated to this Cliffwater company. There was a report last week that one of BlackRock's funds, I believe, was halting withdrawals. And the first one that really was one of the initial cracks was a firm called Blue Owl, which was probably 2 or 3 weeks ago now. That one was particularly interesting because a lot of the private credit that they had been dealing with was on the software side. So because software stocks were kind of collapsing alongside a lot of the chaos and volatility, I think that sort of led to the Blue Owl situation. But you're starting to see these cracks, and to your point, Jackson, there is some amount of self-fulfilling nature here where if people read these headlines about a lot of these funds, BlackRock included, that's scary, and you start to question what you own. You start to question the underlying. You start to question the assumptions of these managers. And that leads to more people wanting to pull out their money because they don't want to be left holding the bag. So you want to get out sooner rather than later. So this is definitely an area to continue to watch because it could have real sort of knock-on effects and ramifications. Like even just thinking back to 2008, like there were very similar sort of parallels to like smaller funds beginning to crack that led to basically a larger cascade of deleveraging. So there could be something like that going on here. So definitely something to keep an eye on.
Yeah, I mean, oil at $118 a barrel doesn't help any of that. I think is well said by Brian. I think the only thing to call out that this is really where I think we have an interesting edge and opportunity for this pod, and Jackson and I are, discussing other things to be doing in different mediums around the level of operating a business with AI and understanding the level of deflation that's coming firsthand. Because I don't think people like being practitioners in that field, because there's an angle of, okay, sound money, Bitcoin, counterparty risk is one thing. But then when you're day-to-day operating and you're leveraging these tools and you see firsthand what's happening from software in these other sectors of the market, like imagine if we sat there in a private credit fund and we were allocating to whatever industry or sector you knew, and inflation's running rampant, people are getting squeezed from their pocketbooks, it doesn't matter where they're at in spend, and then you also understand the risks that are associated with the execution there. How would you be able to fulfill a mandate to make sure you're returning that capital? You wouldn't. And that's just going to start to become more and more apparent. And it goes back to those air pockets. Like they're just everywhere. And it's kind of an interesting dynamic of the self-fulfilling prophecy in the sense that once people start to smell that, like they're going to have to juice the system or they're just going to have a run. Blackstone last week also came out. I think they had to pay off their own balance sheet, like $500 million to meet redemptions. And then there was some of the other automotive mishaps that happened late last year where there was just a bunch of firms that were insolvent once they started to look into the financials. So I think we'll see more of this. This is just getting started.
Yeah. I mean, it's really not that complicated from an inflation versus deflation perspective, but I think it's not complicated, but it's very misunderstood or not well understood. And what I mean by that is, Michael, you're totally right that so much of portfolio allocation is going to need to be re-underwritten in the coming years and decades. But I think most people don't even know where to start because they've never really questioned any of the assumptions that they were taught. And that's incredibly problematic. And I actually I had this conversation yesterday. I won't name the firm, but very large private wealth management company based out of Manhattan. Talked with someone on their investment strategy team, and they're in a position where they're recommending less fixed income to their clients. But we still had a conversation about the entitlements, and he was talking about how entitlements coming due really within the next decade. And he was talking about like, well, Trump's not going to do this, Trump's not going to do that. And I told him, I was like, what do you think ends up happening in the next decade, realistically, when people come knocking at the gate and they were told that they were owed some amount of money as part of whatever entitlement program? Do you think that the government's not going to pay it, or do they just print the money? And so I don't know. I really don't know why it's that complicated, because there's just countless lessons over history in past hundreds and thousands of years where the money just is created and people are made whole nominally. And I actually don't know. I don't know if people actually appreciate real versus nominal returns until that moment happens. Like, as much as we talk about it, I think most people will just look at the house going to $1 million and they will never kind of think critically about, okay, well, house went to $1 million, but everything else that I need to buy on an annual basis is also going up like 10, 20%. So it's like, I'm not actually getting wealthier, but I don't think people realize that until shit really hits the fan.
Yeah, I mean, I think the only other thing to add to that is like this was all forecasted and easily seen when interest rates rose. Because I always like a lot of these things end up ephemeral, or they seem so large when you hear billions of dollars in redemptions, gates, and all of it. But I always just go back to like, think about a restaurant taking out a loan when interest rates are 1-2% and you have employment at a different level, you have consumer spending at a different level. Another example or corollary is Airbnbs and the amount of people underwater now from like 2020 and 2021 that are just all vacant in real estate prices. So you have a restaurant, you take out the loan, you have expected goods, services, cost inputs that you're charging. And then year over year, as inflation runs and as those costs increase, so they're increasing on like how you can make the good or service, the food, but then also on the other side of that, people are feeling it because they're getting hit in real terms. So they can't actually go out as much. And so that loan on the restaurant that you underwrote to be able to be paid back is effectively insolvent because they go out of business and then they just have the debt that's outstanding. Like that's a micro example, but that plays out across every sector, every economy, every individual. Credit cards are an example. Credit loans, consumer vehicle loans. Like this always was the case as you like whipsaw interest rates from 1% to 5%, that everyone was going to get squeezed and things are going to break. So this was easily like forecasted. I mean, we knew. The probably thing we didn't forecast is Bitcoin sitting at $70,000 while this was all happening.
And me sitting in my grandmother's attic at 70K.
Yeah.
Didn't expect that one.
Brian's in the kitchen. That's how bad things are. He's in a kitchen in a bodega. They were nice enough to let him piggyback on the Wi-Fi. So we have to like count our
great Wi-Fi at the local bodega.
All right, so let's do one more in this segment, signal or noise. I guess we didn't even say if it's signal or noise.
I think we all think it's signal.
Learning.
Yeah,
we're still learning, people. I'm gonna say the first one's noise and the second one is signal. But the next one I want to call out, and this actually got a lot of attention from a number of different people in the space, is, let me make sure I'm pulling this up, is this new crypto audit form. So I have a couple thoughts here. I'm sure you guys have a ton. There's a lot of different directions we can go in here. But the general gist, let me make this a bit bigger. This is from Marty and his team at TFTC. They're doing a great job, by the way. They're on all the news. So great job to the TFTC team. But for those who are not paying attention, it says the IRS just created a new crypto audit form designed to make you incriminate yourself. They're sending you a new historical digital asset form that lists 100 plus exchanges and self-custody wallets, Coinbase, Binance, Kraken, FTX, blah, 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 all these different ones, and demands you check yes or no for every single one, then sign it under the penalty of perjury. Not a tax form. They just want you to know this is, I guess that's AI slop. That's okay. But then talks about just like, you pretty much need to comply, or you could be potentially, and you need to tell the truth, or you could be charged potentially with perjury. And there's a lot of outrage over this, rightly so. I mean, this is incredibly invasive. It's very problematic. I think what a lot of people are missing, though, is people are talking about how this is just going to become a honeypot. But what I think people are not already appreciating, that was Pierre's take as well, is this is the information that French tax authorities sold to violent foreign criminal gangs, causing a wave of kidnapping and torture of Bitcoiners. So I think what people are kind of coalescing around is the fact that this is incredibly problematic for a number of reasons. But I think what a lot of people don't already appreciate is a lot of this information is already out there. It's just not held yet in one centralized honeypot by the government agency, the IRS. But think about anyone who's been in Bitcoin 3, 5, 10 years, used a number of different platforms. More than likely, your information has been leaked at least once, maybe twice, maybe 3 times by a number of different providers. I know I've had personal information leaked. And not only that, when we talk about all the technology ramping up on the AI side, it's just going to become increasingly easy. And Michael has been talking about this for at least a couple of years to piece together the puzzle and directionally discern how much Bitcoin people own. And so what I would like to say is for people who are concerned about this, rightly so, the information's already out there. And this is structurally why new solutions need to be brought to market to address this, because you can imagine a scenario where it only gets worse. There's only more information leaked. There's only more incentive for violence, and people know where you live and how much Bitcoin you own. And let's say maybe one day the Bitcoin price is much higher than it is today. And so even still, we're seeing stuff like this happen where armed attackers force French couple to transfer 1 million in Bitcoin during home invasion. This was just from yesterday. This stuff is happening a lot, albeit it seems to be reported more outside of the U.S. than in the U.S. currently. But this is a problem that will scale quite considerably with time. So there's a lot we could talk about, but it's certainly something that is worth calling out and needs attention.
Yeah, I mean, this is the signal versus noise section, but I think Jackson wants to call it the humiliation ritual section, because that's all I can think of when, he alluded to. I mean, the reality is we know, the government prints money out of thin air, and they don't necessarily, the use of our taxes go to, the worst things imaginable at best. At worst, we don't even know. But yeah, I mean, it's the reality of there's the point I won't belabor around just being ready for everyone to know everyone's balance and then how you want to live in that world. It's the other side of the coin of being stuck in whatever may happen in your local area. The thing I'm always thinking about here is fires. Fires can happen. They happen around, and it's well, what do you do? It's you don't want to be knocked out of the game in your financial life. But there's the other side to it that is you just got to figure out how to, not go to jail, right? You don't want to be perjuring yourself. You don't want to be lying to the government. This is the world we live in. So it's something you have to manage and think about. And so if you're forced to do that, to Jackson's, I think, main point is you want to just be cognizant that that information will ultimately end up out there. It's not a matter of if, it's just when, and then how you're prepared for that, because you don't want you or your family to be at risk.
Yeah, I don't have a ton of thoughts, to be totally honest. Pay your taxes. I think, correct me if I'm wrong, Jackson, but I think this form is only being sent to people that are actively being audited, because, and so that's why it's historical in some sense, because they're doing a look back because you're being audited for some various year. Is that correct or incorrect? It's not like this is going out to everyone this year.
Yeah, by impression, it's not going out to everyone, but I haven't been able to discern who is receiving it. But it says it's coming alongside Form 1099 DA, which is the digital asset 1099, which means exchanges are reporting to the IRS, blah, blah, blah. But yeah, it's not, I don't think it's widely distributed. I haven't received one. So I don't know who exactly is receiving it, but I think the broader point stands where I'm going to put this in the signal bucket, because people should be just thinking about these different things as the years go on, the price goes up. It's going to get worse before it gets better. And so don't do yourself a disservice. Think about it while it's still relevant and timely and you have time to act on it. So last segment, we are going to do what is called the last take. Let's go around the horn, and each one of us is going to ideally come prepared. I don't know if any of us came prepared this time, but again, we're flying or learning how to fly the plane in real time here. So we're each going to give one take, and we can all just react to it in real time. Just really, really light, really fun, casual stuff here. And so, Michael, I'm going to throw it over to you, because you seem to have some of the wheels are spinning up in that brain of yours, I can tell. So what's your last take of the day here?
I think there was something that stuck out about, I think it was Eric Prince from Blackwater referenced drone warfare, similar to stirrups for saddle, to be on a horse, and what it meant for warfare and just conquering and asymmetry of violence. And I think that in this new world we're heading to, there's the notion of everything ties back to money, right? There's that idea of every war is a banker's war. And so there's capital to be made there's energy production that's at the highest level needed now. People are recognizing it because of AI and just everything else. The derivative we talked about with oil. But then there's this like notion that everything will kind of remain the same and things don't change, and things are drastically changing. The money's changing. It's going digital. Intelligence is changing. We know artificial intelligence and people paying attention there. But then I think the geopolitical world and the power that has been kind of expelled or kind of like just impressed upon the world is changing as well, where we don't necessarily have the leg up that we thought we did. And I think that all of that combined, I don't really have an answer. It's just more something to be aware of and then prepare accordingly, because it's going to just be an insane rest of the year, let alone rest of the decade. And I don't think people are really just prepared for that across how they think about their livelihoods, their jobs, their financial order, or even how they custody their Bitcoin.
Yeah, you cut out at the end there, at least you did for me. But what I discerned is pretty much my main takeaway is in the United States, we've been living in a situation of complacency where we've just kind of assumed that we're the best, we're ahead of everyone else. And I remember this definitely going back to Dubai in 2024 and just being in the GCC and seeing the attitudes of the people that live there. And they were just totally different. I mean, it seemed like to me, there was an attitude of wanting to pursue excellence, of being competitive. And then I came back to Philadelphia and everyone's just like fat and they're slow and they, don't have any motivation. And that's incredibly problematic for a number of reasons. And I think just outside of the individuals, the state itself has got incredibly complacent. We've been the center of the financial system for a long time, which de facto means that we're the center of just about everything. And I think that complacency, what do they say? The chickens come home to roost at some point. And so we're probably seeing the very early stages of that. I don't know exactly what it means, but yeah, you don't want to be complacent. You just, especially now, I mean, there's a number of reasons why you wanted to do that, but it's certainly not good to have a complacency attitude for the country as a whole.
I have an actual anecdote. Am I back?
Yeah, you are.
I have an anecdote on that. I won't dox who, where, but this is a publicly traded company. The person was at an all hands about AI. And in their chat, they were referencing Block's layoffs because it's a company tied into a similar sector. And I don't know who the person was because I just got a screenshot, but you can imagine this person was like a Stanford MBA or whatever, a very Ivy League school. And his claim was Block's layoffs are because of their Bitcoin allocation and Bitcoin's hit. It had, that was their angle. It's like, because, companies are telling everyone the opposite of what you're saying. It's like, it's fine. Don't worry about it. In reality, they're getting everything in place so they can mass lay off people. Like that's what's happening. That's what's coming. And, I think that is just what you said, complacency just stuck out because I wanted to bring it up, but also because that's really where the world is that people are telling them like nothing's happening, it's staying the same. In reality, it's going to like hit people over the head.
Yeah,
that's hilarious. It kind of ties to what I wanted to say in the sense that, Jackson, if you could pull up that Daniel Batten tweet, and I'll make the link make sense. But like basically my last take is like, think for yourself, think critically, think from first principles, because so Daniel Batten, who has done a great job educating the masses on Bitcoin's environmental impact, he had this tweet here that's, if you scroll down to the chart that he's showing here, it's basically, there was this one report in 2018 from DeVries, some author that wrote some paper about Bitcoin's environmental impact. And it was totally wrong. Like it was just factually incorrect. But then you can see based on this chart, like how much that just was pervasive. Like that piece of incorrect misinformation was then cited hundreds of times from 2018, still up until today it gets cited. Now he mentions here that it's being cited much less over the past couple of years, mainly because there's been sort of counterfactual academic papers put out that specifically debunk this one paper. So my point is like, it kind of goes back to the beginning of the discussion around just general misinformation on the internet. It's very hard to discern what's real or what's not. And that's why it is so important to think for yourself, particularly in this world where it's like, oh yeah, you just ask Claude. It's like, well, yes, to get a sense for things, but like you still need to do some second and third order research yourself, think critically, think from first principles, because stuff like this can be pervasive and get cited as fact, even when it's not. And so it takes a while for that to sort of like churn out of the system in some sense. And I think that's a great case study of it. So it can be combated, but sometimes it takes a long time. So it's just a reminder to think for yourself, think critically.
Yeah, it's so true. It's incredibly important because it's so easy to outsource your thinking these days. Brian, you mentioned Claude. I mean, part of me just wanted to take the transcript of what you just said and give it to Claude and say, like, should I trust this guy? Like, should I actually not outsource my thinking and see what Claude says? But yeah, it's actually remarkable. I couldn't believe my eyes when I saw that thing that you just pulled up. The fact that was just one piece back in 2018, and then thousands, probably tens of thousands or hundreds of thousands of different journalism pieces have been published since then on just nonsense. I mean, that's, and in the context of LLMs, I mean, that is also concerning. We're just like, that data could be easily junked up as well, and then we're relying on that for all sorts of things related, personally, business, etc.
Can I just throw the last one on?
How many last takes do you have?
No,
man?
this is a spicy one. Just because I'm going to start to like hold myself accountable by announcing it, and then you guys make me right. It is, we've been talking about stretching that ass, because about stretch. Like, look, he finally did it. So this is like, whoever's listening, Lord and Savior.
I was gonna pull up this stuff for mine.
Lord and Savior. I didn't even realize it was audio with it. It makes it even better. But what I need to do is put a piece effectively breaking down the 11% nominal versus real, the counterparty risk associated versus, and then not understanding that versus just buying the BTC. And then if you want some counterparty risk in your dollars, just buy the bonds and how that will outperform. So like that's another one. But anyway, just wanted to call, because I've been joking around, like stretch that ass is just a funny thing because that's effectively what's going to happen at a certain point or happen in real time. Because why don't you just go buy the Bitcoin and then park less of it in Bitcoin if you don't want to manage the volatility and reduce the counterparty risk. But then he like now slot posted yoga pants in a high rise. It's really just, and now people are calling it out. I think it's going to start to become the cool thing of like how much Bitcoin's too much or whatever. So anyway, we'll expect to see more of that.
No, it's funny. I don't need to pull. I'm not going to play it, but I had another Sailor Slop video ready to go for my last take. And I was just going to say, this is definitely not good for Bitcoin. I don't know what happens next, but this is just, it can't be good. I know some people don't want to hear that, but I don't like what I'm seeing, but that's okay. I'm going to stay on the sidelines. I have a little bit of MSTR, which I'm definitely underwater on. Haven't opened that account in a while, but definitely underwater on a small position there. And yeah, this is strange behavior.
The thing is, it's going to become more and more apparent. People are already calling out of like, oh, this is an issue of the amount of Bitcoin, being purchased. So anyway, I'll have more. Yeah, but go ahead.
No, I mean, I don't have a ton to add. I would say I would differentiate. Like, I actually don't think the amount of Bitcoin is the problem. I think it's like the perception and how absurd and ridiculous these posts look. Like it just makes the whole idea of Bitcoin seem so unserious. It's like, oh, the biggest buyer of Bitcoin is like just posting this AI slop. Like it's a very bad look. It's particularly given like, oh yeah, they're marketing this stuff to institutions. Like, just have some self-awareness on this stuff.
I mean, so imagine if you're a sovereign.
To see.
But imagine if you're a sovereign looking to allocate
deal.
And they're holding, X amount of BTC. I did think there was a tweet, by our good friend SF Hodl, who's I know listening, so he'll appreciate the shout out. I don't know if you saw it. That said, I think Sailor will get to one Nakamoto before Nakamoto gets a strategy. I thought that was tier one shit posting. But yeah, dad at your own peril. Dad at your own peril.
And with that, we will conclude the last trade. Please like and subscribe to the channel. Let us know what we can do better. Let us know if you like the new format here, any other ideas and segments, and leave a comment. Really appreciate it. Especially if you ridicule Michael, I always get a laugh out of those. Like here and there, people are like, they just have to pick a fight with you for whatever reason.
Or
maybe
comment.
They want to stretch that ass, man.
Comment if you're underwater at a DAT, and then Jackson's offered to send a certain number of sats to a wallet underneath. If you comment that you're underwater and you put an address, maybe Bitcoin will end up in your wallet. I can promise some Bitcoin will end up in some people's wallets.
Wow, we can promise you that. All right, gentlemen, thank you.
Thanks, boys.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.